All right. Good morning, guys. Once again, I think I don't know why this guy knocked me off. A quick one. I'm using this particular Zoom today because of one of us that is not going to be present. So she needs this recording. All right. Once again, good morning, and I believe today is going to be a great day. Today's class is going to be a great one too. All right, so let's get to work. Please let me know if you can hear me very loud and clear.
Loud and clear.
Thank you.
I
All
can
right.
hear you too.
Okay, thank you. All right. So, guys, I want to say thank you for the last trade. Um, we analyzed together as a team. This was a trade. Okay, I used it as a reference point this morning in the first class I had with the other students. And look at what you guys did. All right, look at what you guys did. We identified this other block, and I can remember when we did this analysis, price had already gone up here. We said if this block is valid, price will always come back to test the block. And that was what happened. Price pulled back exactly into the block, and boom, that's the journey up to our take profit was done. And I had to make a short, video on that and also post for you guys to see that it is not a rocket science. It is what we do here that plays out. And in that video, I described during the trade, I also described a couple of things in the trade. When you take a trade and price is in profit, like pushed back up in profit, you can break even. And I mentioned what break even is. Um, Break even is adjusting your stop loss from these points that we had to be our SL to break even. We now place it on our either entry, all right, or we take a little profit depending on how far the trade has gone. All right, so in that incident, I adjusted my SL from this point and I placed it somewhere here. I think I secure about $6. All right, so if market paraventure reverses back without getting to TP, it will close me in a partial profit. That is what break even is. Now, the trade eventually did TP, but I think when it got to this point and did this retracement, I allowed it to push back up. When it pushed back up, I think I got my profit in about $6,000 or $7,000. All right, before the CPI came in, and then okay, before the CPI, I had even done take profit, and then the CPI came and then do a pullback to about 70%, and then pushed back up into that our all-time high. So I just said, let me walk you guys through this phase. Okay. You did a good job. And then we need to repeat this if we must stay profitable. Doing analysis, believing in our analysis, and sticking to the rules. That is it. So this morning, we're going to look at another ingredient in trading. And that ingredient is known as FVG. That's fair value gap. And how is fair value gap is being identified in the market? Guys, we're going to look at what? FVG. First off, I like making it simple for everyone to follow. Okay. Now, we want to look at the meaning of FVG. All right. Let's look at what is FVG in trading. Let's just have an understanding of what this is. No, if you look at it here, you can see the in trading, and FVG stands for fair value gap. It is a price action concept popularized by smart money concept, that is SMC, and ICT methodology that identifies an imbalance or inefficiency in the market. And FVG occurs when the price of an asset moves so quickly in one direction, usually across three consecutive candles, that it leaves a void or gap where others were left unfilled, acting as what a magnet for future price action. When we talk about future price action, in this, I want to underline this. I'm sure we had already done this in our previous class before. Now, future price action, that means price would always come back in the future to fill in all the inefficiency handle. Those spaces that price left in the market, price will always come back to fill it. Now, having understood what FVG is and why it occurs, all right? We said why it occurs is usually when there is news, when there is something happening, let's say, for instance, an explosion in the US or US bumping is another city and all of that. And you notice that there's a swift movement in the market during CPI. This happened during non-farm payroll. This also happened. So when we notice this swift in the market, we said oftentimes there's always what price will leave what we call imbalance in the market. There will be an imbalance in the market. If you see imbalance in the market, there is a tendency that price will always come back in the future to do or to trade into that imbalance. And this imbalance is also known as what? Inefficiency. Now, we are going to go.
Before we move further, please, can I quickly ask? The future is not defined, right?
It could be today, it could be tomorrow, it could be next week, depending on price movements.
Okay, all right.
Good. Now, I'm sure you don't want to see any images because I'd already shown you guys a couple of images, but this one is very clear. Let me click on this guy. All right, this particular image tells us clearly of what a bullish fair value gap is and what a bearish fair value gap is. Now, you can see that this swift movement led to price leaving an unfilled space in the market, which is this is the previous candle, and this is the one that created the fair value gap, the imbalance in the market, because the starting of this candle, it didn't start here to cover this FVG, but it started up here to move. So when we see a situation like this, we said is a fair value gap. Now let's move over to our real chart. We want to identify fair value gap it could be in gold, it could be in stocks, it could be in any asset, all right? Let's look at it in US 30 because US 30 has been we have been trading US 30 for quite some time now, and then we can see it. So in situation like this, all right, look at it here. Over here, we can see there is a fair value gap here. Between this candle and this candle, there is a gap here. We also see that there is another fair value gap here between here and here. Are we seeing it? That means there's a swift movement in the market, thus making this price to leave an inefficiency in the market. You can see this place. This is an FVG. All right. So let me put it there so you can see it clearly that it's an what? FVG. Now, this is me. I'm just showing you guys that because...
Sorry, FX Choice. Sorry that I'm drawing you back a little. The first one you drew, your reference from the green candle or the red candle?
Yeah, so yeah, of course. So this is the green candle. Of course, this is just a sell market. Was like a pullback. But what we want to see is that can we spot out a fair value gap in it? It could be as a result of this or that. Once you know it, it is when we are learning, we stick to, three consecutive red candle in a row. But once you understand what an inefficiency is, whenever you see it in any time, it could be as a supportive bullish candle or what. But once there's an inefficiency in the market, you'll be able to spot it. I don't know if this makes sense.
Yeah, I understand now.
Good. Yeah. So because Yeah, because my eyes is already trained to see it, spot it. So whenever I see it, I just know it. So this is an FVG. And also there is an indicator too that helps you do the work. But I oftentimes don't like people using it. Sorry. I don't always like my student using it anyways, because it makes them feel lazy. Like you be lazy to, do the work. So you can see, like I just bring out market breakup structure, all right, into this chart so that you know when price is breaking structure and change of character and all of that you can see. So in the situation whereby you're looking for AVG, I think this was supposed to come with market structure, breakup structure, FVG and other block. I think, hold on, let me check something in 4 hours if that feature is also supported. Okay, so I think this doesn't carry. We can also have another looks algo, this thing that tells us about FVG. Let's see. Sorry, let's look for FVG. So I'm just showing you this that you can also have an indicator that helps you mark this guy out. Other block, B blue, uh, ICT trading, Friday, vision, agreement, looks go, OVG, entry, trading segments. There's a particular one I used, and it could just, let's see, it will just do the marking for you, and you don't have to stress yourself. Okay, so look at it here, all right? So you can see this guy now. So this guy already does the work, spots the other block, and show all of that in the screen. So that as you're going, you can see these are bullish order block. All these ones you're seeing are bearish order block. So you see, these guys marks it all out for you. All right. But this is a lazy man work. I don't know. But I mean, if you're just starting, you don't know how to identify it. All right. So these guys will just help you pick it up all out.
So, that choice, please share the indicator because you just the
Very easy.
abracadabra. I can,
Very easy, easier. Just come to indicator and then
uh,
come to indicator and then come to SMC. Look at it here.
okay.
SMC plus other block plus FVG plus reversal plus UT bolt plus all of there are a lot of them. There are different ones you could use. So you can just pick it. It will help you tell you what the market does. All right. So I'm just giving you this as an expo so that you can use it to make your analysis a lot easier for you. So you know what this is. But I'm going to take it out from my own class right now so that I'll be able to teach you guys well. I'm sure you've noted it, right? Noted.
Yes.
Good. All right. So now that we've been
F-
able to go ahead, sir.
but the drawings are too interesting.
The drawings,
Too
right?
many, too many indicators. Yeah. It comes with so many packages.
Yeah,
It's
yeah,
a full
yeah,
of.
yeah. So you can choose to remove some stuff. But after this class, I think I will find the other one I do use that is a lot lighter with different stuff. That comes with a full set of different stuffs. That's why it's so plenty. You can take it off.
Mm,
When I finish, I'll find a cleaner one for you, and you
all
can
right.
use that, guys. All right. Cool. Okay, going forward. So this is how you identify it, all right? This is how you identify other block. Sorry, a fair value gap. You can see, I just look at it, I pick it,
Sorry,
look
how
at
do
it.
you take it off, please?
Just click here. Once you click here, it will show you
Click
now
where?
come, look at my mouse. You
Okay,
see
okay, I
an
can see the
arrow
button.
pointing here. Now you follow
Yeah.
it and then come to delete button
Oh, okay.
and then you removed it, like what I just did now. All right, good. So please, let's pay attention. Let's follow. Let's follow. So now, because of this, I've been able to know each time I see, look at here, there's an FVG here. All right, there's an FVG here. Look at here. there's an imbalance here in the market. Why? Because price will always come back to trade this imbalance. Now, my point now, the point I'm going to make in this particular meeting now is that you see FVG, whenever you spot an FVG, know that FVG can also serve as an entry for trading. FX Femi asked this question yesterday. He said, I didn't spot any good order block. And all I saw in the market was FVG. Don't know how to take my entry. Please, let me tell you, it is some of us who trade smart money concepts that uses order block to take entry. ICT uses FVG for their entry. I know of a couple of my traders, in fact, some of my students who have, studied the market and realized, they said, Coach, I noticed that whenever price comes, sometimes it will just stop at the FVG. Sometimes it hits the FVG and move. So instead of me waiting for price to get to my order block, because most times whenever you see FVG, order block is always a bit closer. All right. So now, but in the case that in this situation now, it's just an FVG you can spot here, another FVG here without an order block. So what you do, and I take my entry here? Yes, you can take your entry here in FVG. I don't know if this has answered FX Femi's Alabi's
Yes,
question.
yes, it did.
Good. Okay, so this is it. So, guys, we have been able to, identify this is a bullish FVG, and I had shown you guys what a bearish FVG is. An FVG here. All right, there's an FVG here. There's an FVG here. If you go up again, you might, okay, this one price has already traded to cover it. Okay, so that is just it. Now let's go back in time. Let me use another asset, guys, because of my personal trading. I don't want to scatter what I have there already, which that's CHF. Sorry, guys. Let me get uh, maybe probably a trade a broke Canadian dollars, CHF. Okay, that's CHF. This guy's movement, with this, how compacted this is, you might actually not get been able to, like, there's so close movement in the market, so you might not get what we are looking for here. So let's look at NZD. No, let's look at Euro GBP. Euro GBP or Euro USD. But let's look at Euro GBP. Okay, now in this situation now, all right, you can see in here we can have here, let's be mapping out our FVG. Here, can you see what happens here? Price left an imbalance in the market. True or false?
Yes, true.
True.
Good. Now, here we have spotted one. Over here, the price left. Now, price left FVG an imbalance in this place. Now, what happened? Let's see, look at from this point to this point. All right, it's an imbalance in the market. Can you see where price now entry now came in for this trade? Can you see an entry? Price trade into this FVG, and now it's going back for itself. And trust me, this will happen. Can you see now? Meanwhile, there is order block up here. Can you see? This is an order block.
Yeah.
This is a bearish order block. Let me put it there. Let me turn this to light yellow. Let me put it here. This is order block. Order block is also known as OB. All right? Good. See, and FVG. Do you know what happened? Price didn't care to come to the order block. He took his entry at FVG and is selling. So I want you guys to know that your entry condition is going to be based on what you have practiced over time. And see, between order block and FVG, which one is price taking me in more? I'll use both of them. So I'm not going to make you say, oh, stick to this alone, stick to that alone. No. It is what, as you are learning, practicing, you'll be able to see what happened. There was an FVG created here in this market. Price trade into it and cover it. So you want to go back to history. Begin to check where. Look at this. As price traded this FVG, You want to see this? This is an FVG2 created here, between here and here.
Yeah.
All right. You want to see what is happening? There's another FVG here. Look at it here, between here and here. And you see, price has not traded. Because price has not traded, let's do something. Let's see. Let's see. Now, let's go back to the future. Has price gotten here? No, not yet. Look at it here now. See where price is. So when you see now that price, something happened and this guy will sell and boom here and push back up, boom here and push back up. Somebody said, but why? Why did it go that far? Why did it go that far? Because the person is trading like amateur trader without looking at what is happening in the past, that they are aware imbalances in the market that price will need to fill. That's why I said it could happen today, it could happen tomorrow, or it could happen in the future. Because price left those candle on field doesn't mean that it will remain like that forever. No. Sometimes you just see price constantly selling. It's not that it's heading nowhere, it's coming to balance this guy that he left for quite some time. So what we are going to do now is we are going to look at other currency pairs, look for where we can spot imbalance in the market and, be able to play with it, identify it. Whenever you see it, look at it in this situation. I showed you guys here, it has already been traded. And then you go back to the future, you want to see this price tap into it, you see? Tap into it, cover the imbalance, and continue going. So if you follow it, look at it here. Look at it here. Price tap into this. Look at between here and here. Let's see. Between here and here. Imbalance in the market. You see? Price trade into, filled it, and come back again. So you want to check where in the market, how to identify it. How do I see it? Can I make an entry from it there? No, you go back to the history and create it. And that is the way it is. We saw there's an imbalance somewhere here in this market. But if you check this in the future, I'm sure price must have already traded into this particular imbalance. So there's an imbalance also created in this movement here. And some would be very tiny imbalance. It must not be so big. Once you see there's an inefficiency in the market, it must not be a big one for it to be, oh, perfect. But this is how it works. Ladies and gentlemen, this is how to identify imbalance in the market. So this is what we're going to do today. We're going to identify bearish imbalance and bullish imbalance. This is a concept I want you guys to understand first, how to identify it, where to identify it, and how to trade it. We said sometimes if you're looking for a trade and you can't find an order block, a clean, and you can see this imbalance, all right? To me, part of my criteria is I want to see this imbalance and I want to see this other block. See these two things? I want to see this guy here, which is my other block here. Sorry. I want to see this guy here, which is my other block. Then I want to see this FVG. Then I want to see this FVG in the market. This makes me this makes my entry criteria a perfect one for me. All right, guys. So let's head on to other assets and do this together. The call is going to end now, and then I will send a link again for us to continue. All right.